Start off with what you wrote, where gold was down for 17 days in a row. And we know that gold and silver, they have been suppressed like there's no tomorrow. Why do you think they were suppressing gold for 17 days in a row?
Well, it's basically first off, it's a statistical impossibility for any market to go either up or go down 17 days straight. I mean, if you flip the coin, you're in the billions as far as I think I calculated it would go back to 1493. If you used a coin flip and did the statistics, it could only happen once going back to 1493 based on the amount of trading days. My guess is there is something smoldering in the background, and you can see it in the open interest. They're doing everything they can to keep gold and keep silver a lid on top of those markets. If they were to get loose and really start moving higher, you would see derivative bombs going off left and right.
So at this point, you think they're really, really nervous about what is happening with the dollar, what's happening with the economy, and they're basically trying to keep people away from the precious metals.
Yeah, absolutely.
Let's talk about the economy, and we'll feed this all back into why they're keeping the precious metals so suppressed. Now, we understand that the debt ceiling issue is coming up very, very soon. We had this $1 trillion budget, which is only going to last until, I think, September 30th. And we see the economy, we see retail stores. I mean, like 3,500 stores are closing. We see housing bubbles all over the place. Existing home sales, new home sales, pending home sales, all declining. Corporate debt is just exploding right now. And we see that the Fed right now is trying to convince everyone that the economy is fine. Now, where are we headed with this? I mean, in your analysis, do you see the economy declining very rapidly right now?
Yes, I see the economy declining. You can see it. The precursor or the cause is the credit impulse has turned negative worldwide, and it's turned negative particularly in China. And every time you see the credit impulse turn negative, we go into a recession. Actually, in China, the yield curve is inverted. And if you look at the United States going back for the last century, every single time that we've had an inverted yield curve, we have had a recession follow that. Now, we have had recessions without inverted yield curves, but never did we not have a recession after the yield curve inverted. So the inversion in China is truly a flashing red light, ringing bell saying they're headed into a recession. And I mean, they're obviously very heavily debt laden. So that's a real warning sign.
So when you say the credit impulse, we've gone negative, we talked about this before in other interviews, where you're saying that this maybe, and correct me if I'm wrong, this is a sign of the credit market freezing up.
Well, it's a sign of new credit creation slowing and actually turning down. In other words, new credit is not being created as fast as old credit is being paid off. So the total amount of credit over the last 6 or 7 months is actually turning negative. And the world runs on credit. It's like, can think of it like you have a tank of gas and there's a hole in the gas tank. I mean, you're going to run out of gas. The world cannot run without credit. And I've said this for the last couple of years that when this hits, it will be a credit event. And that's exactly what we're starting to see it now.
Do you think this will start in China and then spread?
Just over the last week, I've come to the conclusion in my own mind that I do believe that it's going to be an event coming out of China that will tip the whole cart over. China now is very much like the United States was in 1929. And the United States is very much like Great Britain was, a shrinking or failing empire, if you will. And China, like the United States was in 1929, is the up-and-coming power. I truly believe that there's going to be some sort of, more than likely, a credit event in China that engulfs the world. And, I'll say it again. I think the world is going to get to turn once something big in the credit markets happens, I think the world will turn twice before markets close down.
When we look at China, we understand they've been accumulating a lot of gold. So is Russia. Now, they have an insurance policy when things start to go south.
Exactly. And it's been my thesis for a couple years now that China played in this cesspool of credit in order to build stuff. So when the credit edifice comes down, who's going to be left with what? For instance, what is the United States going to be left with? We've gotten rid of our gold, so we don't have gold. We're going to be left with busted debt and broken infrastructure. Whereas what China has done over the last several years, they've taken on a tremendous amount of debt. And when that implodes, they're still going to be left with brand new infrastructure, brand new cities, brand new airports, rail lines, you name it.
What you're saying here is they played the system. They used the fiat money system, and they took it and they just, ran the debt level up as high as they possibly could, building a lot of stuff. Everything's brand new. And they knew that, from what you're saying, and this is what I'm hearing, they knew that the system would eventually come down, and they knew that once that implodes and the system that we're on implodes, we are covered with the amount of gold that we've been purchasing, because they're purchasing it for a reason.
Right, exactly. They've bled reserves off into gold, so they are going to be left with real money. And you're absolutely right. China knows, and China has known since 1971. I think it was Mao who said, this is the beginning of the end to our currency system when Nixon went off the gold standard. So I think they absolutely understand the whole game.
Here in the United States, you already stated that we really don't have any gold. Actually, no one will really allow an audit of the gold. So we don't really know what we have. We're all speculating that we have nothing. What, at this point, as everything starts to, as we see everything falling apart, the Fed, they're still trying to convince us that, the first quarter GDP of 0.7, which was revised to, I think, 1.2, they're saying that's an anomaly. That's a one-off thing. And they're still planning on raising interest rates. Are they playing a completely different game?
Well, it's a game of trying to instill confidence in people by telling people, the economy's fine, we're able to raise interest rates, and they're hoping that they can raise interest rates so that when the next crisis hits, they have some room to lower rates. But even if they were able to get rates up to 3%, going from 3 back down to 0 is not going to be enough to reflate. There's no possibility of a reflation. The collateral is gone. The ability to borrow is gone. You mentioned the debt ceiling coming up in September. That's a joke, the debt ceiling. Okay, so it's 20 trillion. They raise it to 22, 25, whatever they raise it to. There's no point in having a debt ceiling because they just legislatively increase it each and every time. So in reality, there is no debt ceiling.
You're right. I think they just use this to make the public feel a little bit better that, we reached a certain point and now we have to vote to see if we raise it or not. And we know that they're always going to raise it, because if they don't, then a lot of things stop happening here in the country.
The government shuts down because they cannot run by using tax receipts. If you just take the military, Social Security, and Medicare, those three eat up basically all of what the tax receipts are. So you could shut everything else down, and they're still not running a surplus.
So by the Fed raising the rates, at a certain point, we've seen this before prior to 2008 where they were raising the rates and then all of a sudden they triggered something and then they started lowering the rates. Aren't they eventually going to trigger the economy where it's going to start to really rapidly fall? We're seeing it fall apart now, but it's going to rapidly fall apart. Are they doing this on purpose?
I don't know if you can say that they're doing it on purpose. They obviously know that this is the most indebted society, or it's the most indebted system we've ever had anywhere in the world, with basically what we had was basically 0% interest rates. You can't go out and raise rates on a system that is already over indebted. It's just not, it doesn't make any sense. You can't do it. It's insanity. So, raising rates at this point creates an implosion. But at the same time, they're trying to create a false confidence that, everything's okay. They can raise rates. I really don't think they can. I mean, mathematically, they can't.
Now,
Think about our debt. Think about just the 20 trillion in federal debt. If rates went to 5%, you're talking about $1 trillion a year just of debt service. I mean, right now it's what, 400 billion a year, but that's what it's been for the last 20 years. And the reason it stayed at 400 billion is because they kept ratcheting rates lower. But if they allow rates to normalize, then you have a public bankruptcy because the interest can't be paid.
very true. Basically, the tax receipts coming in would not be able to support the debt and all the programs. And this is most likely why they've been keeping the rates very, very low, because they know this. They know this to be a fact.
It's why they forced rates down in the first place.
Now, Fed Kashkari, he was out there and he was being interviewed. And actually, when he was saying it, I thought of Ben Bernanke, where he said that, listen, the Fed, they can't spot bubbles anywhere. They're really hard to spot. They can't tell where they are. And actually, I think Bernanke said the same exact thing during 2008 when we actually had the bubbles pop. I mean, are bubbles really that hard to spot?
Well, no, all you have to do is look outside your window. I mean, just pick up a newspaper and look at pricing of assets. Look at real estate, look at stocks, look at bonds, look at the credit markets. These people are paid not to see bubbles.
So do you think the Fed is actually creating the bubbles?
Absolutely. There's no ifs, ands, or buts about it. Bubbles cannot exist unless there's fuel to create the bubble. And the fuel comes from credit creation and money printing. And that's the Fed.
So the Fed has been doing all this money printing, the stimulus, and we had Mark Zuckerberg out there giving a speech in Harvard which was very odd. He started to talk about universal basic income, where the Fed, the government, will just give money to everyone. Everyone doesn't have to work. You'll just receive this money, and this way it will give you time to create fantastic ideas. Is this the last set of tools the Fed has? I mean, why did he mention this?
What kind of a tool is that? That's total stupidity, insanity, whatever you want to call it. Free money for everyone. I mean, where does that money come from? And then if the money can be freely created, then what is the money itself worth? I mean, look, there's other socialist things they're talking about. They're talking about forgiving all the student debt. That's $1 trillion. It's absurd where they don't even think it through. Free money for everyone. It has to come from somewhere. And if it doesn't come from somewhere, they've got to create it. And if it's free to create, well, why don't they just print $20 trillion, get rid of the debt? Why don't they print 100 trillion or 200 trillion or whatever it happens to be, or a quadrillion, and pay everybody's mortgage off, pay everybody's car loan off, stuff, $10 million into everybody's 401k, and we all live happily ever after. The reason they can't do that is because there are some laws in Mother Nature that can't be broken. And one law is you can't create something from nothing. And that's what they're talking about doing here. It's total insanity.
So let's say they went ahead and they did do this. They made an announcement. I think up in Norway, they're doing an experiment there where they're giving people free money like this. I mean, let's say they started to do this and they started to create, the currency. And of course, there'll be interest attached to it. It'll be loaned to the government. The government then will hand it out to the people. And then there'll be more dollars in circulation. What happens at that point? I mean, do you think people are going to take it and go spend it in retail? I mean, how do you think this will play out?
Well, the other side to that coin is what happens to the currency itself? How valuable is a currency that's created out of nothing? Yes, people will spend it. Some people will pay the debt down, but the bottom line from my viewpoint is, what is that currency worth if it can be created with no cost?
So you're saying that the dollar would be devaluing. I mean, won't we see inflation?
Well, yeah, that's the definition of right. A devalued currency is inflation. I mean, it takes more dollars to buy that same cup of coffee or same ounce of gold or whatever, same gallon of gas.
Right, because when the Fed was creating the currency before out of thin air with all the stimulus, it was really going into the banks and it wasn't really hitting the everyday person. Now, what they're saying is they're going to take the currency and hand it out to the everyday person. And that means the dollar will be in circulation and we will see the devaluation of the dollar and inflated prices.
But Dave, we already see inflated prices. Just look at stocks that are trading 100, 200, 300 plus times earnings. Look at real estate, that there's no way the rental income could even come close to servicing the debt to carry the property. I mean, there is huge inflation all over the world, and it's in asset prices.
That is true. They actually channel the inflation into certain areas, like overseas, into the stock market. You're right. But this would be inflation on a wider scale where people would go to, I mean, correct me if I'm wrong, they would go to the store and the cost of, a loaf of bread or milk or something would be much, much higher.
Right. It's the end of the hyperinflationary spiral.
Yeah. I said this before. Is this the last thing they can do to keep this entire system going?
Well, the answer is yes, but they really can't do it. I mean, they can try to do that, but it's laughable. I mean, is that really a tool?
No, it looks like an act of desperation to keep the system going.
Exactly. And that on its own would probably create a panic.
Now, I wanted to get into this Australian asset manager, Holter Asset Management, where they made this strange decision where they decided, something, it's too risky out there. We see bubbles, we see bad things happening, and we're going to return hundreds of millions of dollars to their clients. Any take on why they decided to do this?
There can only be one reason. They don't want the liability. They would rather return investors' funds to them. That way, they see a collapse dead ahead. I mean, if they didn't see a collapse, why would they walk away from all those fees? I mean, I think you're talking about some genuine people that care about their clients and giving the money back to their clients because they don't want to be responsible for the losses that are going to come.
So they decided, something, we see something coming and let's not be a part of the entire system going down and having all these people lose their money.
Right, exactly.
So since we're talking about the system coming down here, and we talked about this before, I believe that we are getting very, very close to the point where I think the system is going to actually come down. I don't know the exact date, but from everything that I've been looking at, it feels like it's approaching very, very quickly. And I wanted to get your take on what you see happening during this period. Like, what signs should people be looking at? For instance, do you think gold and silver, do you think they're going to be rising by $25, or do you think we're going to see huge gains and that might be a signal to people that something is happening?
Well, if you saw gold go up $100, $200 in a day, yeah, that would pretty much be a no-brainer sign. It would mean that they've lost control of the cap. I'm not so sure that you're going to see many warning signs from the markets at all. I think something's just going to snap, and within a couple of days, markets close, and you're not going to be able to move. So you're going to have what you have. You're going to be locked in place. The reset is going to occur, and whatever new values are on the other side, that's where you stand. So I don't see a period of time. Like, you go back to 1987. You could see in 1987, the end of August, September, you could see really volatile markets, up, down, and then all of a sudden the market broke. So you had 6 or 8 weeks of warning. I'm not sure we're going to get 6 or 8 weeks of warning. I'm not sure. I mean, first off, all markets are completely rigged. So you're not going to get the warning signs over a long period of time. Once the rig breaks, it breaks.
So do you think once this breaks, I mean, we're going to see, when we're looking at the market, we're going to see the market come down. I mean, people are going to have some kind of sign where they're going to say, oh, wow, the market just dropped 1,000 points or so. I mean, you don't think people will see that?
Yeah, you probably will have maybe it's only a Thursday and Friday, and then markets don't open Monday morning. I just don't think that there's going to be weeks or months of volatile markets before they're forced to pull the plug. Because what they've done to rig these markets is they've used derivatives, 100 to 1 leverage or more capital to keep the painting proper. In other words, to keep the average person looking at the newspaper saying, oh, well, the stock market's up, interest rates are here, I guess everything's okay. And they've rigged everything using derivatives. And once we get to the point where they lose the rig, I mean, the losses on the derivatives are huge. And obviously the derivatives market is so big, it's over $250 billion worth of leverage. I don't see that once they lose the rig, that's it. You're not going to have weeks and weeks of warning. I do think, I know you had asked me this before the interview as far as, should you have actual cash on hand? And yeah, I think cash may work for a couple weeks, maybe 3 or 4 weeks. It's hard to say. And I think cash will go to a premium. In other words, your $1 bill or your $20 bill or whatever will actually purchase more during a banking closure than it does right now, because dollars, physical cash, will be scarce. But then it's going to set in, that the reality is going to set in, and your farmer that has, meat or eggs or whatever, the farmer is going to say, hey, wait a minute, I'm not giving away eggs for a piece of paper. And that's when you'll see metals come into play from a barter standpoint and become remonetized, if you will.
So what you're saying, the cash that the people are holding outside of the banking system, I just want to make it clear, people will not be able to go to the bank and say, something, let me get as much cash as I possibly can, because the banks will be shut down at this point.
Right, exactly. So, I see a complete closure of all financial markets probably throughout 80 or 90% of the world. So you're not going to have the ability to wire funds. Let's say that you're lucky enough to have funds in a bank that actually is solvent and doesn't close. The wire system is not going to be open for your funds to be accepted into your bank.
So let me ask you this question. When the banks close down and you can't wire any money, you can't go and get cash out of the system, and all that comes to a halt, what happens to the people's savings in the banks, their retirement, their pensions? Do you still think they'll be receiving, let's say, their Social Security check, their pension check, the entitlement programs from the government? Will that cease to exist also?
How could they continue to exist? If you're talking about a systemic closure, so you get a check or so you get a wire from Treasury for your Social Security. If your bank's closed, your bank's closed. You can't get at it anyway. As far as the accounts themselves, we've gone over the last few years now where you see country after country writing legislation, bail-in legislation, meaning when your bank closes, you lose your money.
So previously, when we first started out with this interview, we mentioned about the credit and how that has gone negative right now. And we talked about credit freezing up, which means, I just want to make it clear to everyone that people will not be able to use credit cards. People will not be able to take out loans. And it also means that when the credit starts to break down, the deliveries to stores, trucking, railways, that will also come to a screeching halt.
Right. I like to use the example of a loaf of bread. How many uses of credit are there from a wheat field to the shelf? I'm not exactly sure. There's probably 5, 7, 8, 10 different uses of credit. You've got the farmer who uses credit to buy grain, to buy fertilizer, to buy fuel for the year. Then you've got the silo. The silo uses credit. Then from the silo to the actual bread manufacturer, there's trucking in between those. They use credit. Then you've got the bread maker. They use credit. And then there's another use of shipping, and that's to your local store. And your local store buys whatever they buy on credit. Whether it be 30-day, 90-day, 60-day, whatever. Every single one of those moves is facilitated by credit. And if credit's not available, that loaf of bread's not getting to the shelf.
I just want to get into the government aspect of this. The government right now, especially under Obama, they're employing millions and millions of people. When this crisis hits, which we almost saw back in 2008, all those people who are employed in the government, I'm assuming they'll no longer have a job.
Yeah, I think you're assuming right.
So we're going to have millions of people within the government. And what is the government going to look like at this point during this crisis?
I think the only thing that you would have funded, and maybe it would be funded by script, I don't know, would be the military. But ask yourself, Dave, are your local sheriffs or your local police, are they going to work if they're not getting paid? That's why you need lead. as another precious metal.
What we're seeing right now is a lot of people are not going to be prepared for this. I mean, people who've been listening to us, people who've been, preparing for this, yes, they understand that something is about to happen. It almost happened in 2008. Instead, they, created trillions and trillions of dollars to keep it from happening. But this time around, it doesn't look like this is going to happen. And for those people who have not invested in gold or silver or anything like that, who've kept all their entire life savings in paper, I mean, how are these people going to survive when the system comes back online? Do you think there's something that's set up that will maybe transfer the dollar into something else, or do you have to just depend on the gold and silver that you have?
As far as paper assets are concerned, if your institution survived, or even let's say that you've got treasury bonds, notes, or bills or whatever, after the reset, there's probably going to be a new currency. And yeah, your asset will transfer forward, but maybe only with 10% of the buying power that you started with. So it's all about buying power, and the whole purpose to gold and silver. Silver, you're probably going to need to barter to get to the next system, but to transfer your wealth from this system to the next one, that's going to be done primarily through gold. And I know a lot of people say, oh, well, real estate. The problem with real estate is extremely heavily borrowed against. So you're going to see a deflation in real estate. And the other thing is real estate can be taxed away from you. So I just don't think that, and you're already seeing softness in farmland. You've seen that for the last year or 2 years. Farmland has actually started to turn down. That was a bubble. But they got to prices where no matter what crop you grew on it, you could not service the debt required to buy the property. That's a bubble. There can be no bailout this time. What happened back in 2008 was sovereign treasuries stepped up and started borrowing. In order to have a reflation, in order to reflate the system, you've got to have a credit expansion. And individuals and corporations could no longer take on more credit. The only credit-worthy entities on the planet were sovereign treasuries. Over the last 7-8 years, the U.S., the EU, Britain, Japan, you name it, they've all exploded and destroyed their balance sheets. Now there's no more white knight to step in. When this time when it goes, there is no saving it because there's no entity left with the ability to save it. That's the difference between then and now.
You talked about the currency and how we'll be resetting to a different currency. So the dollar will no longer be the reserve currency anymore. This new currency, I don't know if it will be a reserve currency or it'll just be a local currency. But the question is, what is the country going to look like? I mean, is our way of life going to be completely different than it is today?
Oh, our way of life, I would be shocked if we end up with our standard of living at 50% of what it is right now. I would imagine it will be less. And as far as the reserve currency is concerned, some people say it's the yuan. You have people talking about, one world currency. I have no idea what the currency is going to be. Some people are saying it's going to be a digital cryptocurrency. We're going to go to a cashless society. The only thing I am sure of is that gold and silver will have value, and probably greater value in terms of purchasing power than it does right now. So when we go through the reset, if you own gold and silver, your wealth will be reset higher.
Bill, thank you very much for being on the X22 Report Spotlight. I really appreciate it. Once again, how can people see your work?
You can go to www.jsmindset, that's JSMINESET.com.
Thank you very much. I really appreciate it. Thank you for being on the X22 Report Spotlight.
My pleasure, Dave.